Fortinet stock crashed after it reported quarterly earnings results, so a lot of investors are asking if Fortinet stock is a buy on the dip. In this video, I'm going to review Fortinet's latest quarterly results, and I'm also going to update my recommendation of Fortinet stock. I'm going to answer if I think the stock is a buy, hold, or a sell at current valuation. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
And here I have a chart of its market cap, and you can see the value that this stock has lost since July of 2023. In fact, it was trading at a market cap, excuse me, of over $60 billion, and that's fallen down to $38.87 billion. So the stock has fallen considerably. There are reasons why this stock is down that justify a decrease, and I'll highlight why I think the stock price fell so strongly after these latest few earnings reports. So let's get into it. Now, remember, Fortinet is the market share leader in total vendor revenue for cybersecurity, right? It has been climbing steadily since the third quarter of 2019. It had the second place market share, but it's been gaining, and in the recent 2 quarters, it has the leading market share in terms of total vendor revenue in the cybersecurity space. Now, that's important because you look at the total addressable market for cybersecurity, it's large and it's growing. According to Fortinet and its Gartner research, it estimates a total addressable market of 125 billion in 2023, and that's expected to grow to 199 billion by 2027. And in my opinion, this industry is going to continue to grow far beyond that, perhaps until the year 2040. Cybersecurity is becoming more and more a necessity rather than something that's nice to have. And that's not going to change as more and more time is spent online, on digital apps, on digital products. And so that's going to create an increase in need for cybersecurity. So you have the leading cybersecurity company in an industry that's growing by at least double digits in terms of, you can look at the different categories of cybersecurity, and on average it's growing by at least double digits here, 9%, 14%, and 20% compound annual growth rate. Okay, so in this page I'll highlight why Fortinet stock is falling so much, and it starts with the first line item here, billings. Billings are the deals that Fortinet secures in the quarter. What were the value of the contracts that it secured in the quarter? And this is a forecaster for future revenue for the company, because these billings eventually turn into revenue. And if the company doesn't secure enough billings in the quarter, then future revenue is likely to be lower and lower, because as it works through its existing billings and it doesn't get new contracts, new billings, then the revenue will start to fall and fall and fall. And so this is the troubling trend for Fortinet. You can see billings growth year over year only 5.7% in the most recent quarter. That was down considerably from 18.1% in the previous quarter, and it's been falling consecutively for 6 quarters in a row, and management is forecasting continued trouble in this metric going forward. Now, that's not good news for the company long term, but I will highlight that this growth of billings in the 30 and 40% range was also unsustainable. This was the company gaining the market share, and you could see how much market share it gained ahead of industry growth. So Fortinet was growing billings much faster than the industry overall was growing. So it was taking share from competitors, and that can only go so far, right? Before competitors start to retaliate, before they start to lower prices, hire more salespeople, increase spending on research and development, and really start to catch up and not let you take so much market share. Revenue also fell not fell, but decelerated to 16.1%, down from 25% revenue growth in the previous quarter and 32% growth in the quarter before that. So if you go back all the way to the third quarter of 2022, revenue growth decelerated by half from 32.6% to 16.1%. But again, this revenue growth of 33% should have been a telltale sign that it's not sustainable when you compare it to the industry growth rate, which we saw up above. The industry is not expected to grow, any part of the industry, over 20%, the industry that the specific parts of the industry that Fortinet operates in. So this above average growth was for a brief time and should not have been expected for the longer term. The good news is that Fortinet operates in a lucrative business. The business model is very lucrative in terms of profitability. I can show you here. Fortinet's operating income increased to 371 million. That was up from 324 million in the same quarter the prior year. The company is generating strong profitability. Operating profit margin of 27.8% was only down slightly from the 28.3% operating margin in the same quarter the prior year. The company is also profitable on the bottom line with net income of 323 million, increasing from net income of 262 million in the same quarter the prior year. In evidence that the company expected and anticipated a slowdown, you can see hiring slowed, and in fact the company reduced its total headcount from 13,677 to 13,618 quarter over quarter. Now, since management expects this level of growth to continue, this slower level of growth, I would like to see a continued trend of decreasing headcount, because you're no longer hiring for those massive growth rates of 30% plus. So now you've got to moderate your hiring and moderate your headcount to adjust for the slower growth rate so that you can deliver the kind of profitability that investors expect from you. One other thing I wanted to highlight in this slide is the company still has a good deal of deferred revenue, 5.29 billion in the most recent, as of the most recent quarter. That was up from 5.13 billion. These are deals that the company has secured over the last several years, and it remains to be performed so that Fortinet can count this as actual revenue. So this is deferred revenue, and when it performs the service, it turns into actual revenue. So this is a good sign for the company's revenue. For the next several quarters, it should be okay in terms of revenue growth. It should still be growing revenue, and it'll give it some time to reaccelerate the billings growth, hopefully in the double-digit range again. So in the most recent quarter, we have here the breakdown of the number of deals in the quarter. You have the number of deals between over 50,000, over 250, over 500, and over 1 million. And the area of most difficulty looked to have been the area of deals in the smaller range of over 50,000. That decreased quarter over quarter from 4,790 to 4,732. Number of deals over 250 remained flat. Number of deals over 500K increased slightly, and number of deals over 1 million increased as well. So the real area was number of deals in the over 50K range. The relatively smaller businesses were pulling back spending. And then another interesting phenomenon during the quarter was that the number of mid-range, a percentage of the mid-range services that Fortinet sells decreased as a percentage of overall from 49.8 to 45.4, and the bulk of those orders went to more entry-level services from 24.9 to 27.7. So again, a sign that businesses are being a little more conservative in their spending, in their cybersecurity spending right now. Since the macroeconomic environment doesn't seem very strong, it's slowing down, interest rates have moved much higher, business activity is slowing, and so that's understandable. That's common among all businesses right now, slower spending. Free cash flow as well was strong for Fortinet in the quarter of 481.1 million, increasing from 395.2 million. So free cash flow, the company generating strong free cash flow from its business, turning revenue into cash flow. I like to see this. These are the kind of companies I like to invest in. So I mentioned earlier that management is expecting more of the same, more slowdown in terms of billings growth. The midpoint of billings here between 1.56 billion to 1.7 billion in the fourth quarter of 2023 estimate. If the company hits this target, that would be a decrease of 5.2% from the 1.719 billion in the same quarter the prior year. So a continued deceleration and now turning negative billings growth for Fortinet. And this again is the reason for a lot of the investor selling of Fortinet stock, this decrease in billings and the continued downward trend in billings. So revenues is expected to come in at 9.9%, close to double digits. But remember, the decrease in billings eventually will turn into decreases in revenue if the company doesn't turn this around, if it doesn't rebound the billings growth over the next few quarters. So that's a big risk there that's looming for Fortinet. Now, the company still expects to generate strong profitability, 28% operating profit margin at the midpoint. It would be down from 32.5% from the same quarter the prior year, but still strong profit margins to be sure. And then net income to be flat at about 43 cents per share, about the same as the quarter last year. So the real trouble here is the billings. That's the big metric that's turning the whole thesis around for Fortinet, that's turning investor sentiment negative for Fortinet, and understandably so, because this, if it continues, will turn into decreasing revenue for the company longer term. Although, given that the company is generating such strong free cash flow and such strong profitability, there is room for Fortinet to make progress in billings if it needs to and sacrifice profitability. It can go to these customers that are not signing deals right now, and if this persists, it can say, all right, we'll lower prices a little bit to get you to sign these deals, and that way sacrifice its profit margin a little bit in order to re-accelerate billings growth if it needs to. So it does have a buffer there to boost billings growth if it needs to. Although I don't think it's going to need to, because of what we highlighted earlier in the video, in that the industry is growing by double digits or more in the different segments that Fortinet operates in. So unless it continues losing market share, then I don't suspect this billings decrease to continue. In the near term, yes, over the next few quarters, perhaps, because businesses are pulling back spending. They're concerned about the macroeconomic environment, and so whatever area they can pause or delay or decrease spending, they're doing so, and that's hurting Fortinet in the short term. Longer term, however, I mentioned cybersecurity, not an option anymore. It's becoming more of a necessity. So now let's look at valuation. Now that the stock price has fallen considerably, Fortinet trading at a forward price to earnings of 29 and a price to free cash flow of 18.99. So given all the things that we considered already, the risks from the decreases in billings, the total addressable market and the growth in the industry, and Fortinet's excellent profitability and cash flow generation, I think at current valuations, Fortinet stock is a buy. I think it's an excellent stock to buy at current valuations. But before I let you go, if you've gained any value from this video, please subscribe to the channel. It'll really help me make more videos just like this one.